Many Kenyans wake up every day, every morning to go to work, even when it's raining. But our bank accounts do not reflect the efforts that we make on a daily basis. We wake up to go to our offices and any other working places that we have, but at the end of the day, our bank balances are zero. Now, where did the rain start beating us? Or why do the rain always beat us? Welcome to Finance Focus with Andrew, a platform where we engage in conversation that endeavor to enhance our financial literacy. And in this video, we are talking about a permanent job and a permanent empty bank account. Why do we find ourselves there? And is there a way out? Let's dive in. Some of the reasons as to why we find ourselves with jobs but empty bank accounts. Number one is lack of financial education. In our entire financial education, there is nowhere we were taught about money management. There is nowhere that the system focused on enhancing our financial literacy. We were taught how to work. You are taught how to do a particular thing in your profession. You are taught how to make money, but no one ever taught you how to manage that money. So that is one of the weaknesses that we have in our system that make the rain to always beat us. There is nowhere that you have ever been taught about money. And it's more as in the African community or in the African family setup. No one really talks about money. Your parents did not tell you about money. Maybe they did not have the knowledge too, but no one taught you about how to deal with money. So that is one of the reasons why we always find ourselves there. Number two, lifestyle inflation. You see, there's some class that comes with being a worker or employee of a particular place. There's in your mind you place yourself in a certain class that you must maintain. So you keep inflating your life after every paycheck. If you get a minor pay increase, you increase your spending by much more. So lifestyle inflation is one of the other things that keep us in that particular cycle. We are people of spending, and endless spending. Number three, black tax and family pressure. Many people know that you are working, so they expect you to support them financially. They are always knocking at your door for some help, always knocking in your phone for some help. So black tax or family pressure can keep you in that cycle forever. So generosity is not wrong at all, but have your own boundaries. And the day you realize that you cannot solve all your family problems, the day you realize that you cannot solve all your relatives' problem, I believe you will feel less burden when it comes to black tax, because you will have a limit of what you can do and what you cannot do. The other thing is poor or no investment decision. Now, it comes back to lack of financial education. No one taught us how to invest. No one taught us where to invest. So you might have some money, but that money will end up sitting in a bank account because you are an individual who avoids risk by all means. So you don't engage in even the smallest kind of investment. And number five, it is debt traps. You see, when you are employed, many people are willing to lend you money. You see, either may it be the circles, may it be the banks, may it be the digital platforms, once they get to learn that you are permanently employed, they know that you are guaranteed a salary at the end of the month. So for them, they are sure that they are guaranteed that they will have some money to deduct for their loan. They will always be knocking at your doorstep to offer a loan. So you might even find yourself collecting a loan that you didn't really need. So debt trap. So these people offering you offers after offers, will ensure that you stay in that track forever. A permanent job and a permanent empty bank account. But is there hope or all is lost? I can guarantee you that all is not lost. And especially in this era of information, we are in an era where technology has enhanced financial literacy. More even than before, you find many people talking about money, how to make money, how to manage money. So some of the few tips that you can try and use. Number one, track your spending. Kindly try to understand where your money goes. Write down every coin that you spend, and at the end of the month, you will be able to understand where your money goes. Live below your means. Living below your means that your spending must be less than your income so that you are left with something small to save, stroke, invest. Let it not be that you have a big salary, but you cannot sort an emergency of 5,000. The other one, start saving or start investing. After every paycheck, ensure that there is that amount that you have set aside to cater for that rainy day, to cater for that need that might come unawares. And the good thing is that in 2025, we say you don't just save, you invest, because we have so many avenues that help you to invest in avenues that you can still access your money. The other one, start investing early. You see, in your early employment years, you tend to think that you have a lot of time. You think like you have all the time in this world, but that is not the case. You have very little time. You'll be in your 20s, but sooner than you think you'll be in your 30s, sooner than you think you'll be in your 40s, and sooner than you think you'll be approaching your retirement. So start as early as you can. You can regret doing so many things early in life, but you can never regret start savings or starting investing early in life. The other one, have some financial goals. If you don't have a destination, any road can get you there. So have some financial goals. No wonder how small they are. So that is it. If this was important to you, don't just sit on it. Take action. Just try one thing, even if it is tracking your spending the coming month, and that might be the starting point of your changing journey. If you found this helpful, share to someone whom you think need it. Give us a like, give us a comment, and see you in the other video.